Hey everybody, this is David Skrika. This is our stock chart of the day. And a little later today on September 13th. And the reason being is I was putting out an update for the lifetime members, talking about updating on some positions, et cetera, et cetera. So today we're going to talk about inflation. CPI is going to be our stock chart of the day. The CPI came out today. And like I said, one thing I try to do with stock chart of the day is I want it to be relevant to a news item that's happening or a stock that's making a big move. Do something that's in the news, basically, right? So we see inflation ticked higher on the back of higher oil prices last month. It's up to 3.7%, down from the peak of 9% last year. But I do think we're nearing the bottom of this cycle. This is very, very normal in these inflationary cycles. If you actually go look at the last two inflationary cycles, which are the 1940s and the 1970s, there was really three waves to them. Okay, there was the first wave, which is like mid to high single digits, the second wave, which gets you to double digits, and the third wave, which is well into the double digits. Now they underreport inflation now, as we all know. Like if we go look at shadow stats right here, great site by John Williams. He's got how they if like again, you can see how they reported inflation here in 1990. You can see at the peak, it wasn't 9%. It was more like 12%. So they do underreport inflation. And even right now, he's saying it's more like 6 or 7% rather than 3%. But whatever the case is, the government can basically say what they want to say because they have the government. So, and we can see inflation is a long-term phenomenon. This is going back to World War II. And you can see that the CPI, which was a 30 or so when it started this chart. Actually 21, 22 has gone up to, 15-fold to over 300. So, prices are up 15 times in the last, 80 years. So, and they're up really more because again, inflation is underreported. And you can see they were pretty steady. They can see that acceleration here in the 70s. And then this acceleration post-COVID. So looks like we're in another high inflationary period. This one took 40 years. And, the 40s to the 70s was 30 years. No cycle is going to be exactly the same. And there was inflation, by the way, in the 19-teens to early 1920s after World War I and the Spanish flu. So, yeah, again, this seems to be a 30, 40-year cycle in inflation. And, there's also tailwinds to inflation on top of just printed money and government spending. We've got, production getting away, deglobalization, I guess, and the production comes back into our own economies. The cost of production in terms of wages and other costs are much higher, in North America or Europe than making this stuff cheap in Asia and China, et cetera, right? So anyhow, I just thought I'd show you that. So then we're going to go look at historical CPI, and this goes back to the 50s. And again, you can see these spikes. So I think we're right here where we were in kind of like the late 60s, early 70s. And then we're about to see the other spike. And then what we're seeing in oil right now, it's kind of maybe a sign of that. And then it came down again here. And then there was that final spike to almost 15%. And remember, this was 6%. Our first spike was much higher. It went to 9, and it went to 9 with inflation. It went to 9 being understated. So it really went to almost where it did in this first spike. So we probably have at least one spike left and another 2 spikes left. So I think we're kind of in this area here. Now, this is a long-term chart, so that looks straight up, but usually like this kind of area here where it was like kind of below 4%, that was about a 6-month time frame. So I could see that maybe occurring till, for the next 3-4 months. And then we kind of recelebrate, especially if at some point the Fed is forced to kind of cut rates. And we can just see like this only goes back to this this spike is like unlike anything we saw, like 9%. We haven't seen that since the 70s. It broke this kind of high here in the late 80s, which was just over 6%. So it tells me we're in a new secular uptrend for inflation and the whatnot. And I think another thing about inflation is I predicted all along the reason I wasn't that bearish on the markets heading into the summer was because I knew that the year-over-year comparisons for inflation are going to be a lot easier. Like this is crude after spiking to 125 and then back to 120 again on the back of the Russian invasion of Ukraine, and really remaining up to 100 till about June, and then really to above 90 for most of the summer. It started to go down late in the year and touch $70. So crude mostly was between 70 and 80 late last year. So, the first time, this whole time period here, crude's at, over 100 or over 90. So the year over year comparisons are very easy, right? Especially when crude is spending most of its time between 70 and 80. Crude's going to be down anywhere from 20 to 30% year over year. Well, now we're getting to the point where, you look at September last year, crude now is a little above there. And after October, the year over year comparisons are going to be, if crude stays where it is, we're talking, crude's going to be up 15, 20, 25%, 30%, wherever it goes year over year. So those easy year over year comparisons, which is one of the reasons inflation came down, is now kind of out of the system. So I think we're nearing the low of inflation for this move. The only thing that could really maybe slam inflation to 2% would be a complete crash in asset prices, real estate prices, stock prices, etc. And even then, I think they would reinflate very, very quickly. So then, just to end it off here, so stock chart of the day. This is one of our sponsored companies. I wasn't going to do another deal after Carlisle, but I really like Bruce, the CEO of this company. He's had a history of putting of creating a large deposit in Mexico and selling it off in the past. So Regency is in Mexico. You can see it came out in a very bad market for juniors. Fell into the summer of 2022. And then actually went up almost tenfold, and then had some good results, had some good news come out, and then they had some results here. They were good, but I guess the market had run up so much it kind of disappointed the market, and we're kind of now in this 20 to 30 cent range. And I think we're kind of what this bottom was here is what I think this is here. So the financing is 20 cents with a half warrant at 30 cents. Above this chart, I have the deck, so the information on the company. Plus, I also have the forms for your accredited investors, etc. So if you're interested in this, please get back to me. I think they're raising just about $1.5 million. And like I said, it's 20 cents with a half a warrant at 30. And like I said, and the CEO has a good track record. I'll probably sometime within the next few weeks or month do another interview with him. I did an interview earlier in the year, right when the kind of started this move up. Kind of right, maybe when it was roughly the same as where it's trading now, maybe a tiny bit higher. And and they are a sponsor of Stock Chart of the Day. So anyhow, and the disclosure is I do own a little bit of the stock as well. So everybody take care. Tell me if you're interested in Regency. I think, again, we're at the bottom of this lull in the inflation cycle. And another thing too is, until inflation comes down more, you can see here bonds are up a tiny bit today. We're still the rates are still near the higher end of their range. So everyone take care. I hope you'd enjoy the stock chart of the day. Obviously, other than the disclosure for Regency, I didn't really show any charts today of stocks. We just showed inflation. So everybody take care. And I hope you're all having a great Wednesday.